Hello and welcome to a discussion on revenue recognition. After viewing this video, you should be able to state the general requirements for revenue recognition and record revenue for the sale of various types of products, principals and agents, software and hardware, and franchises. The main issue related to revenue is recognizing the revenue in the proper period. GAAP requires that revenue be recognized according to the realization principle. Revenue must be reported on the income statement when the earnings process is judged to be complete or virtually complete, which means earned and nothing more is owed to the customer, and there is reasonable certainty as to the collectability of cash in exchange for the goods or services. The SEC requires 4 other criteria to be met before revenue is recognized for public companies. The first, persuasive evidence that an arrangement exists. This can be in the form of a written contract or an informal agreement. The second, delivery has occurred or service has been rendered. This means that nothing related is left to be provided to the customer. Third, the seller's price to the buyer is fixed and determinable. The price can vary based on circumstances, however there is an agreement on how the price will be determined. And fourth, collectability is reasonably assured from the buyer and there is a demonstrated ability to pay. A demonstrated ability to pay is more certain than collection is expected, which is required under GAAP. There are a few guidelines that are generally followed. The revenue for sale of goods is recorded when the goods are considered delivered to the customer. When the goods are considered delivered to the customer is determined by the terms of shipping. FOB typically means freight on board. The term FOB shipping means the goods are considered delivered when the goods are shipped. The term FOB destination means the goods are considered delivered when the goods are received by the customer. These terms determine who owns the goods while the goods are in transit between the point of shipping by the seller and receipt by the buyer. Services that are provided over one period of time are reported in the period the service is performed. Services that are provided over more than one period of time are reported equally over the time the service is provided. Goods and services that are bundled and provided for one total price must be separately valued and reported separately when the goods or services are provided. Generally, the goods are reported as revenue in the period the goods are delivered, and the services are reported as revenue over the time the service is provided. The price and the amount of revenue recognized for the goods and services is proportionate to the fair market value of the goods and services sold separately. A right of return is common when there is significant competition or obsolescence can occur in a short period of time. Revenues and costs associated with returns must be estimated and recorded in the same period the revenue is reported when it is possible to estimate a reliable rate of return based on past history. Customers will not pay for goods that are returned and an exchange is not actually incurred. If a reliable rate of return can't be determined, the revenue must be recognized when the products are sold by the retailer or wholesaler to the final end user. The issue of principal or agent is important because it determines if revenue is recorded at the gross amount with an offsetting cost of goods sold or at a net amount. A principal provides the goods or services directly to the customer. The principal takes title to the goods and must report the revenue and the cost of the goods sold or the direct cost of providing the services. The income statement of the principal will report the gross profit earned on the revenue. An agent is a facilitator that earns a commission for matching buyers and sellers. An agent recognizes revenue for the net commission received from facilitating the sale. No cost of sales or gross profit is reported on the income statement. An agent earns revenue just for providing a service. Software is often sold in a bundle that includes the product, upgrades, and support. Revenue must be allocated to the separate components based on the fair market value of each element and reported as it is earned for each separate component. The fair market value of each separate component is determined based on vendor-specific objective evidence, which generally means a price if it is sold separately. A reliable value may be estimated if not actually sold separately, and components that do not have standalone value must be deferred and not reported as revenue until all services have been provided to the customer. In this example, hardware, software, and service over 3 years is sold for a total price of $1,700. The price for the 3 components if sold separately would be $2,000. Their hardware and software are considered provided and earned when it is accepted by the customer after installation, but the service is provided equally over a 3-year period. A price for each component must be determined because the revenue is earned at different periods of time. A percentage based on the fair market value of each component of the total is used to determine the amount of revenue that can be earned for each component. The revenue related to the software and hardware is reported in the period the goods are delivered and accepted by the customer. The service revenue is reported equally over 3 years. Franchise revenue is generally recognized during the period the service is provided to the franchisee. There are typically 3 different ways to earn franchise revenue. The initial franchise fee for the use of the name and training to begin the business is the first way. Substantially all of the initial franchise service must be performed before initial franchise fee revenue may be reported. The second way, services are provided to support ongoing business. Continuous support fees are recognized equally over the time the support is provided. And last, revenue may be earned based on a percentage of franchise revenue. It is recorded by the franchisor in the period the franchisee reports their revenue. After viewing this video, you should be able to state the general requirements for revenue recognition. You should also be able to record revenue for the sale of various types of products, for principals and agents, for software and hardware bundled together, and for franchises. Please go to www.studymyaccounting.com and work through practice as you learn for examples of accounting procedures that are followed to record each of the concepts discussed in this video. Then work the practice test. Please write out your answers and check your understanding to the answers provided. Thank you for being prepared for class. It is much appreciated.